Ladies and gentlemen, welcome back to Driven Wild. Today we are talking about GrubHub CEO Downplays Sale. GrubHub's been taking L's left, right, and center. And honestly, between the massive missteps in New York City to just overall losing market share to DoorDash and Uber Eats, it is understandable that Just Eat Takeaway is reconsidering their purchase of GrubHub and was actually considering selling GrubHub not too long ago. I will leave a link in the description talking about that particular subject, but now they're doubling back to where GrubHub CEO Adam DeWitt is currently not even thinking about it anymore, and overall just downplaying the concept that they're even gonna do it. So with that said, I want to hear what changed their mind, what is this teeter-tottering that they're doing, and everything in between on the subject, because this is a very interesting topic overall. So with that said, let's get started. GrubHub won't be sold anytime soon, according to CEO Adam DeWitt, who said at a Wall Street Journal event Tuesday that the company is more focused on finding an investor than a buyer. So what they're doing currently, instead of them trying to sell out GrubHub entirely, they're actually looking for more people to buy into it, which is very interesting because one of their major investors were downplaying the concept of buying GrubHub to begin with. It's almost like they're trying to pit their own investors against each other by looking for an investor to GrubHub, whereas Cat Rock Capital was completely against GrubHub being a part of Just Eat Takeaway. It's more about finding ways to help us grow than it is necessarily about the sale. DeWitt said on Tuesday at the Wall Street Journal's Global Food Forum, according to the Journal. Which that makes sense. If the goal is to compete with companies like DoorDash, who are growing exponentially, you gotta be able to match the funding they do. And quite honestly, they're currently not doing it through market share. So right now, they're currently at a wall, and some of their marketing tactics are just not working. Just Eat Takeaway, owner of Chicago-based GrubHub, revealed in April that it was exploring the addition of a strategic partner or a full or partial sale of the company, which was coming off a quarter of negative sales and order volumes. Jet investor Cat Rock Capital had previously urged the European delivery giant to sell GrubHub and focus on its domestic business, which would make sense from a Just Eat Takeaway perspective, but for a GrubHub's perspective, they bought GrubHub not even a year ago. Them trying to sell GrubHub now, that's not a good look for GrubHub overall, so that would end up destroying the company. But it has reportedly struggled to find a buyer even after its asking price was as low as $1.26 billion, a fraction of the $7.3 billion it paid for GrubHub last year, and yet some of its suitors, private equity firm Apollo Global Management, reportedly showed interest, as did GrubHub's founder and former CEO Matt Maloney. I actually made a video talking about Matt Maloney considering buying back GrubHub after he sold it. Feel free to check that out. DeWitt's comment suggested that neither scenario was imminent. Meanwhile, Jet reiterated its plans from April. Nothing has changed in our relation to our previous statements around GrubHub, the company said in a statement. In April, we confirmed that management is currently actively exploring the introduction of a strategic partnership and or the sale of GrubHub in whole or in part. The process is ongoing, and further announcements will be made as and when appropriate. So the CEO is saying that it's not going to happen anytime soon, but Just Eat Takeaway is trying to sell the company. So maybe it's not going to happen anytime soon, but it does seem like it's gonna happen. And you know what? It's a dang shame, because GrubHub has already been through a lot in the past couple years, and quite honestly, losing as much as it did to DoorDash, we may not even have a big three anymore. We might have a big two, and it's going to be Uber Eats and DoorDash. I will say this, it's a little concerning that GrubHub CEO and their parent company, Just Eat Takeaway, is not on the same page. That means the companies are not united in their goals. That's already a problem in my eyes. On Wednesday, German investment bank Berenberg initiated coverage of Jet with a sell rating. The firm cast doubt on the company's ability to make money, even if it were able to find a buyer for GrubHub. Ooh, so even if it were to sell at this point, it wouldn't even be profitable. Yikes. Jet responded in a statement that it has a strong cash base to finance its business and that a maturity profile of its debt is aligned with profitability. Okay, so it's got a strong savings account, which DoorDash has literally zero, by the way. And they're making money in comparison to the debt they collected, which makes perfect sense. Now, the question is, what is it doing to grow? Because I know that the marketing team for GrubHub is... it's a little questionable, to say the least. Nonetheless, the news sparked a sell-off of Jet stock, which had fallen more than 16% as of midday Wednesday to an all-time low of $3.11 per share. That seems more of a result of the recession and the bear market than is about the stock itself. Although I do think GrubHub has a lot of challenges ahead of them, I don't think that's the reason why. GrubHub has struggled relative to its U.S. delivery counterparts, DoorDash and Uber Eats in recent years. Its concentration in large urban areas hampered its growth as delivery took off in the suburbs during the pandemic, and it has been slower than competitors to add large chains to its marketplace and to diversify into other delivery segments like grocery and retail. Now that they mention it, it does feel like GrubHub is walking in comparison to Uber Eats jogging and DoorDash just running. Now, Uber Eats did say that they have yet to go big. They can end up being a major competitor against DoorDash in the future, but DoorDash currently, what is it, like almost 60% of the market share right now. GrubHub seems to be more focusing on its virtual brands and starting virtual brands and having their own exclusive virtual brands than it is focused on trying to add existing brands on. They've started TikTok kitchens, they've started MasterChef kitchen. I made videos to both. I'll leave them in the description. I know I'm plugging a lot, but it's all relevant. But the point is that they're trying to start new brands from the bottom up as opposed to sticking with the brands that are currently out and working from there. They're just playing a completely different game than DoorDash and Uber Eats. It has also made missteps, most notably a free lunch promotion in New York City last month that overwhelmed its technology as well as its restaurant partners. On Tuesday, however, DeWitt said the giveaway was a win. 200,000 new customers downloaded the app and restaurants got hundreds of thousands of orders as a result, the Journal reported. Didn't they say that restaurants are actually in debt because of that? That seems like it's a little political and they're trying to give us just enough information so that way it looks like they did the right thing even though they didn't. This is my opinion. It's worth what you pay for it. I've been paid $10 for my opinion. So here you go. Adam DeWitt seems like he is not aligned with what the goal of Just Eat Takeaway is and is not actually trying to solve the problem to actually grow the company. But that being said, that's based on what is being said in this article. For all we know, what he is being told by Just Eat Takeaway is that they're trying to find a way for it to grow by a certain deadline. Otherwise, we're going to have to sell the company. Almost like he's trying to race against time. You know what I'm saying? But I'm surprised that Matt Maloney hasn't considered buying it yet. Like, is he trying to wait for it to hit the millions as far as value instead of the billion? Either way, GrubHub's got a lot of work to do if it's going to continue to compete against Uber Eats and DoorDash. Thank you so much for watching. I really appreciate it. As always, make sure to hit the like button, subscribe if you're new, and I'll see you guys next time. Peace!